Good evening, everybody. We're going out at the moment on YouTube and Facebook, I think. I'm Gwen Robinson, President of the Foreign Correspondents Club, and we're doing something unusual for us tonight, which is live streaming an event and taking questions at the same time. And I hope for whoever is watching now, you'll stay with us. Send questions as you want. You can post them on YouTube or Facebook or email them to info@fccthai.com. And our speaker, Burin Adulwattana, will answer people's questions also from the floor. We do have some members and interested people here tonight. Welcome to everybody. Just a short point to make here is that, as everyone will be aware, Thailand is also battling the spread of coronavirus. We at the Foreign Correspondents Club are staying open on a limited basis with reduced events. However, we think that part of our remit is as a public service and to remain a neutral platform for people who want to speak and for important issues. Tonight, as if you're watching, you know, we are looking at the impact of the coronavirus on the economies and markets of Thailand, Southeast Asia, the region as a whole, and more broadly, the world. And next week, we will try to bring you a night on the 25th about the future of the tourism industry, mainly focused on Thailand, but maybe more broadly Asia, with top people in the tourism industry here, including the heads of airlines and key tourism bodies in Thailand on the 25th of March. We'll post further details on our sites. Turning to the subject at hand, which is economics and markets in the time of the coronavirus. As we all know, what's happening to the Thai economy is also writ large impacting the region and the world. As fears of a pandemic grip the whole world, actually, growth forecasts are being slashed and economic concerns are now compounding anxiety over public health amid growing turbulence in currencies, capital markets and commodities everywhere. All sectors, as we know, and particularly here from farmers and students to tourism operators, corporations, governments and ordinary consumers, are facing bewildering and uncertain and scary times. These sort of setbacks are coming on top of already slowing growth. As we know, economic growth forecasts are being slashed and could actually fall to zero or worse. So what does all this mean for the consumer and for industry and for all these sectors? Where are currencies and markets going, and are government policies generally up to the challenge? To answer these and other questions, we have, as I said, Burin Adulwattana. He is Chief Economist and Strategist at Bangkok Bank and author of research publications on the global economic outlook and trends for interest rates and currencies. Before joining Bangkok Bank, Burin worked for the Bank of Thailand as a global market strategist at the Foreign Reserve Management Department, and before that as a forex strategist at Credit Agricole Hong Kong. He holds bachelor's and master's degrees in mathematics and economics from Cambridge University. So without any further delay, I'd like to turn over to you, Burin. Thank you very much for being with us tonight.
Thank you very much, Gwen, for your kind words. So good evening to you all. I'm honored and privileged to be here. Very unusual times that we are in. For the past 2 months, I think I've washed my hands more than I have in my entire life. And I think that's just to continue for a long time. I think a lot of questions that you probably have in your minds, I think you can interrupt me or you can ask me at the end as well. So let's get started with the outlook for the global economy. This year, I think before the virus hit, I think people were generally quite optimistic about the global growth. I think the IMF said that this year we are going to grow by about 3.3%. But as soon as the virus hit the global economy about at the end of January, I think suddenly this growth rate have been slashed down. And I think now the OECD said that I think we are likely, the main forecast is for GDP growth for the world is to grow by only about 2.4%. You might think, 2.4 is okay. But for the global economy, 2.4 is considered to be in recessions. And it could very well likely that the growth rate could be halved. So it could go down to 1.5% this year. Starting at the epicenter of this pandemic was China. I think China is likely to miss its targeted growth of 5 to 5.5%. And I think some economists are calling that I think China's economy might grow only by about 2% this year. In Japan, I think they are likely to face recession. Starting from the end of last year, they did a VAT hike in October, and then after that, consumption fell sharply. And then this year, with sharp fall in tourism, and also because I think it's also very likely that the Olympic might get cancelled or postponed, and that is going to drop the GDP down by about 0.2 to 0.3% of GDP, and that's going to put Japan into a recession this year. And now the whole world is starting to spread all over the world now. It's starting to spread into Europe and starting to spread to America. Now the WHO said that the epicenter of the pandemic now moved from China now to Europe. Now Europe is the epicenter, and this was inconceivable only about a month ago. So now this is we are facing something really unprecedented here. The first direct hit to the global economy was from Chinese outbound tourism. Chinese outbound tourism. There have been many attempts to compare this episode to the SARS episode, that the impact was probably going to be about the same extent that SARS did to the global economy. But mind you, SARS happened in 2002, 2003, and at the time, look at the number of Chinese outbound tourists was only about 20 million in 2002. But fast forward to last year, the number of outbound tourism was over 160, so over 8 times that in 2002, 2003. So we're not comparing apples and apples here. We are comparing apples and oranges here. So we have to rewrite the whole, our estimate, our forecast, and look at the chart on the right-hand side, the pie chart. You look at the number of outbound tourism for China. The number one destination is Hong Kong, and then followed by Thailand and Japan and other countries. So obviously the first direct hit is when China started to ban their Chinese tourists to come, to leave the country at the end of January. And that is having a huge impact on global tourism. Some estimate that it could be a hit of about $50 billion to the global tourism market, or about 10%. So this shows that how crucial or how critical the Chinese consumer has been for many countries. Even for Thailand, tourism accounts for about 12% of GDP, but with related sector, it accounts for about 1/5, so about 20%. Even in France, it's about 8%. So, Chinese consumers are known to be, they not only come in size, they will only spend a lot. So this is going to dent consumer spending in many countries, and this is what we are seeing now in Thailand. So once China encountered this coronavirus pandemic, China imposed a lockdown on the region of Hubei and Wuhan, which is the capital of Hubei region. But that is the formal lockdown. But the informal lockdown, I think, started all over the whole country. And this is what you can probably see here, the impact it has on China's economy. On the left-hand side, you can see that the PMI for manufacturing and non-manufacturing sharply plunged during the first 2 months of this year, and accompanied by a sharp fall in industrial output by about 13%. export was down by about 17%. Retail sales down about 20% for the first 2 months. So you see, this is having a huge impact on the Chinese economy. And one thing that I like to compare, for the past 2 years, we've been inundated non-stop about the news about trade war and how the impact is going to be, when China stops trading or China is isolated. But for the past 2 years, the world did not go into recession. Why was that? Because manufacturing and trade did not account for the global GDP as much as services do. In a majority of countries, especially in the West, let's say in the US, it's about 2/3, depend on services. Even in the UK, it's about 90% services. Even in Germany, it's about 80% services. So even a powerhouse like Germany. So you can see that services kept the world economy afloat. But what is happening now is directly, make services income disappear. And this is not going to be like when we have a hit on trade. Let's say we have a hit on our factory, and then we have to close factory down for a few months. And then in the 4th month, you can ramp up production, and then things would get back pretty fast. But with services, this is a whole different animal. Let's say you normally have a haircut once a month. Let's say you've been under lockdown for 3 months. In the 4th month, if you come out of lockdown, you're not going to have 4 haircuts, right? Or if you go to a movie every week for 3 months, you're not going to come out in the 4th month and watch 16 movies, in one go. So there will be a permanent loss of income. There will be a permanent loss of jobs, permanent loss of, it could lead to widespread bankruptcies in many small SMEs, and it could threaten many, many more industries like airlines, travel, leisure, hospitality, and there are many more. And also another thing that is happening in China, it's not just a lockdown on services. Factories also face closures. An English friend of mine who's married to a Chinese wife, so he's got a lot of connections. So we talked since the beginning of the year, and he told me that his brother-in-law factory, which was located in Wenzhou, is quite far away from Wuhan. He said 500 employees were told not to come to factory, even though it was quite far away from Wuhan. It was closer to Shanghai than closer to Wuhan. So factories were closed down, and this was happening all across China. And in Asia, we are closely linked to the supply chain of China. China has been the factory of the world for the past 20 years or so, and we're pretty much linked on the supply chain side. So when supply chain gets disrupted in China, this is going to wreak havoc in all of Asia's production and trade and export. And if you look at the number for the first 2 months, China's export dropped by 17%. And this is like a precursor of what's to come. It's going to hit many industries. Apple had profit warning because they said they cannot get their production of iPhones in time. And Wuhan is a big center for producing auto parts, and this is having an impact. I listened somewhere that there was a Jaguar Land Rover executive had to fly to China and put all the parts in the suitcase and flew back to the UK because the supply chain gets disrupted. I'd like to show you this picture. A picture is worth 1,000 words. So let's see this. This is a huge impact, a drastic, well, I don't know whether you would call it improvement. Probably not many people are happy about this. Maybe Greta Thunberg is certainly happy. The air is certainly clear. They said that people in Beijing and Shanghai haven't seen blue sky like this for many, many years. And this is the impact of basically the world comes to a standstill. And it's a huge improvement on air quality, obviously. Let's move on. The US, for the first 2 months, obviously everybody heard about the coronavirus impact. Everybody heard that this was, the thing that was happening in China. The Chinese government imposed a lockdown, but people really thought that was a Chinese problem. It wasn't going to spread around the world, especially if you follow the economic indicators of the US closely. The first 2 months, the US economy was humming along, creating jobs. Unemployment was at 50-year low. So it looks like the impact was going to be quite minimal on the U.S. economy and the West. And that's why I think a lot of people were pretty complacent in the beginning of the year. They said that this was a Chinese problem. It was mainly going to impact, emerging Asia for the most part. But then after the first 2 months, I think we are going to start to see some impact. The first 2 months, you still see unemployment at record lows in many parts of the world. In the US, unemployment rate for the February was at 3.5%, 50-year low. The last time it was this low, Richard Nixon was still president. And it was the same thing even with the UK and Europe and also Japan. So you can see that most people were employed. They had job, and the pay was also rising. So this is a boon for consumer spending. And suddenly, we face this coronavirus. And things became quite bleak. I think the world suddenly woke up. When cases start spiraling upwards outside of China. I think about 2 weeks ago or 3 weeks ago, I can't remember now. It's been a long year. It's been a long few months. But I think a few weeks ago, when there were reports of cases going up rapidly in places like Korea, in Iran, and in Italy, and then suddenly the world realized that, okay, this is not just a Chinese problem. I don't think it could be contained quite as fast. Let's say another thing that we could look at the industry expectations. I think now, look at the PMI, which is a leading indicator. Below 50 is going to indicate a contraction in supply, especially on services and on manufacturing that you can see up here. I think exports or the trade volume, manufacturing, and PMI in services, if you track the data now, they all point to much weaker global economy in the next few months or so. And it's painting quite a drastic contrast at the beginning of the year. Everybody at the beginning of the year thought that, okay, with reduced trade tensions, and this is a U.S. election year, and things were going to calm down, and people could get back to their trading relationship. But then things get disrupted quite rapidly. I think, let's see, the services that have been disrupted, obviously starting from I think the cruise industry is in dire strait. I don't think anyone is going to go on the cruise for a long time. If you go to WHO website, you look at the list of countries, the number of cases infected, and I think at the bottom you just look at, there was one particular item. It's called Diamond Princess. It's a cruise ship. I think the infection rate was like 60%. Like the whole ship they had 10,000 people. The number of infected is 6,000. So I think this is a very bad sign for the industry. And also the airplanes. Many airlines have canceled their flights. 85%, I think, Norwegian Airlines, and many flights in Europe have been canceled. And that's why you see, rows and rows of planes being parked at the airport. And this is going to be detrimental to the survival of the airline industry. I think a couple of days ago, the IATA, the trade body for the airline industry, said they need a bailout of about $200 billion from governments around the world. Otherwise, most of them would be wiped out, because I think, as you know, airlines are heavily leveraged. They take on a lot of debt, and now they have to ask their staff to be on unpaid leave, and there's no customer, and it seems like there's no end in sight, when this is going to turn around. So I think some sort of government bailout would have to come soon. Otherwise, I think airlines would just face an extinction crisis. This is worse than what we've seen during the SARS or during the 9/11 episode. I think this is much worse because there's no ending in sight. There's no traffic at all, and obviously, bars and restaurants will be hit. This is going to be quite bad news for people who work in those industries, and we don't know when it's going to get back. And especially, I think, buffet. I heard from a friend of mine that, when you stay in hotel, buffet is probably the place where you get infected the most, because, people were using, the same spoon to get food, and, could be droplets from when you breathe or cough. So it's going to be bad for business for, something like buffet. And night outs, obviously. And I think I have a few friends who are Liverpool fan. I think they're not too happy that the Premier League have been suspended for at least a month, and I don't know whether the whole season would be completely voided, and that would be bad news for Liverpool fans who had to wait for 30 years, and what an unlucky time to be a Liverpool fan. But anyway, on the right-hand side, the movie industry is also taking a big hit. Even our British spy hero, 007, his movie is called No Time to Die. So he had to postpone his opening date for the movie from April until November. And we don't even know whether November is going to be a good time to launch this movie. But, even James Bond gets scared. So, us mere mortals are going to have to be careful. Let me talk about the complacency. The complacency displayed by the market was so unreal. When we were traveling on a roadshow, we went to meet investors around the world. Our first stop was in Singapore, and this happened over a month ago, in February 10th to be exact. So, I'm way past my 2-week quarantine period. So I was in Singapore February 10th and stayed there for 2 days. At the time, Thailand wasn't really panicking at all. I think we had like 30 or 40 cases of coronavirus, so nothing was happening. When we landed in Singapore, it was a completely different story. We went into Singapore, we got through the Changi immigration control in 2 minutes. There was practically nobody. There was during weekday at 3 p.m. You just waltzed through the immigration, and you got your luggage, got to the hotel within 20 minutes, and that was unreal. And then by the time we get to the hotel, it's a complete shock, because they started checking your temperature. It's what we are doing now. But at the time, we weren't expecting that. So they were checking our temperature. They were asking us to fill out our detail. And this happens at every meeting, at every building we enter to. So Singapore, they trace everyone. And when I was there, normally you go to a business meeting. First thing you do, you exchange business card and then shake hands. They said, no handshaking here. We're not allowed. And they said, okay, let me check your temperature, but no handshakes. So that was a complete shock. And then 2 days later, we went to London on Valentine's Day. We went there, completely opposite. Nobody paid attention to anything. Anyway, traffic wasn't so bad at the immigration at Heathrow. We just also walked through the airport, but nobody was checking anything, no temperature. Everybody was doing handshake. I asked an investor that I knew for quite a few years. I said, are you sure you want to do handshakes? He said, come on, we're all friends. And he started checking my hand. I said, okay, well, let's do it for old time's sake, but let's do it before handshakes wouldn't be allowed. And little did I know that only a few weeks later, handshakes are not allowed now in London. It is completely unprecedented. And also we went to New York. Same thing. Nobody paid attention. So even though in these days and age of information, you can see that markets were completely complacent, because while we were traveling, the S&P 500 was making record highs every day, while stocks were falling in emerging Asia. Stocks in Thailand started falling since the beginning of the year. I wish I known. And now anyway, I'm stuck with huge losses. Anyway, and you can see that at the time, look at around February, the 10-year Treasury, the yield of 10-year Treasury bond was about 150 percentage point. And then it started to collapse. So Treasury yield collapsed when there's a huge demand for safety. When people flee something risky like stocks or commodities, they put money in safe haven assets like Treasury bonds. So yield would come down, yield move in reverse to prices. So when huge prices pick up in the Treasury bond market, so yield came down. The yield came down from what? From the level of 150 to 31 basis point. It was a record low. Never seen this before in 150 years of history of the American bond market. It was record low. And this happened in a span of 2 weeks. And we had the fastest move to a bear market in the S&P 500 history. It happened in over a couple of weeks. And what was fascinating is, look at on the right-hand side. Before Italy imposed a lockdown on February the 22nd, Greece was able to borrow in the international capital market for 10 years at less than 1%. The Greek government was able to borrow at 1%. Let me repeat that again. The Greek government was able to borrow at 1% for 10 years, less than 1%. And now, once reality hit, bond yield spiked. Now it's at 3%. Now the Greek government bonds are being treated as a piece of junk bond, and yield rose in tandem with the risk-off environment that we're facing. So this showed the amount of complacency that the market or the West in general thought that this was really a Chinese problem. It had absolutely nothing to do with us. But I think once it got to Italy, I think now people realize that it wasn't going to stop there, and things went downhill from there. Another thing that have supported the global stock markets for the past 10 years or so is the amount of global liquidity injected by global central banks, like the Federal Reserve, the Bank of England, the Bank of Japan, the ECB. And you can see it tracks each other quite closely. Look at the blue line. That shows the amount of global liquidity being injected. Whenever there's a dip in the stock market, normally central banks responded by injecting more, by doing more QE, quantitative easing, injecting more money. And that seems to support the global stock market for the past 10 years or so. And global stock markets have the longest bull run since the end of the Second World War. And one reason is being supported by low interest rates and also enormous amount of liquidity within the system. But look at the breakdown in correlation at the end of this graph. You can see that stock market tanked, even though the amount of liquidity is still up there. And now the Fed had to turn on the tap again. Just a couple of days ago, the Fed said, we're going to inject more. We're going to inject $700 billion into the market. Nothing happened. Stock market kept falling. Actually, it didn't keep falling in a straight line. What is happening that we see now is a completely volatile market, completely irrational. What's happening now is, let me read you the record of the past 4 days on the S&P 500. On Thursday, stock market, S&P 500 went down by 10%. On Friday, it went up by 10%. On Monday, it went down by 13%. Last night, it went up by 6%. Completely random and completely unexpected, with the deep and liquid market like S&P 500. What is happening now? I think people are realizing now that no amount of interest rate cut, no amount of liquidity would be able to solve this problem. This is a problem of both a demand shock and a supply shock. I think Jonathan gave a good example. It's like there's a vacuum and just suck out all the economic activity from over the world. You can't cut interest rate to kill the coronavirus epidemic. You can't cut interest rate and then people would just suddenly feel healthy enough to go out, feel safe enough to go out and spend and go out drinking. That's not going to happen. So I think I think for the central banks, this is their modus operandi. They have to do it. If they don't do it, they would seem heartless. So they have to cut interest rates. So there's no question about that. But then I think the heavy lifting would have to come from the government. It would have to be the role of the fiscal policy that would get us through this problem. I think most economists realize that this is going to be a short, sharp shock to the economy. It's going to be severe shock, but it's going to be temporary. But how do we get through this? How do we survive, be it 3 months or 6 months? I'll tell you what my baseline, when do I think it will get better? I think it will get better by July, but I'll tell you why later. Another thing that shows that things are not right is we look at commodity prices. Commodity prices have come down enormously over the past couple of months. A lot of friends ask me, when can I go back into the stock market? My answer is, I don't know. I wish I knew. But normally, there are two separate things. Financial markets could do one thing. The real economy could be completely doing their own thing. So if we were to use the real economy, the health of the real economy as an example, what we economists would look at is prices of commodity like copper. Copper is, in our circle, we call it Dr. Copper. Dr. Copper, when prices of copper is bad, then that means the world economy is ill. Once it starts to improve, then the health of the economy is getting better because copper is used in almost on all industrial activities. So I think the price of copper would be a relatively good indicator of what's happening to the world economy. Oil price is also a good example, although not so much these couple of weeks. I think oil price is facing a double whopper of both the demand problem because the global demand has softened, and also the supply side because they are also, for some reason, they decided to do a trade war, a price war between Saudi Arabia and Russia at the moment. So oil price drop like there's no tomorrow. So we can't really judge oil price. But I mean, normally oil price drop is good for the world economy. But it's not so good at this time. It's not so good for emerging markets who are oil exporters, who are dependent on oil products. So that's why what is happening to the commodity market is forcing a risk aversion into emerging market assets. So investors around the world are fleeing emerging market assets because we are a lot of emerging countries are heavy commodity exporters. So they're suffering now. Their currencies are getting sold off. Their stock market are being sold off. Their activities are slowing sharply. And that's why you see on the left-hand side, when it's down means the currency have weakened. And so look at the dollar index. The dollar index shows how strong the dollar is compared to a basket of currencies. Look at a sharp spike a sharp rebound in the dollar on the right-hand side. Since the beginning of the year, the dollar is at 3-year high. It's not because the dollar is going to have the best economy. It's more because I think the world is on a risk-off mode. Everybody is risk-averse. They cut their risky asset and they go back to dollars. And this is what's happening now, and that's why dollar keeps on jumping. Also, another thing is we are seeing a repeat of what we saw in 2008, 2009, where now there's a dollar squeeze. It means the dollar is very hard to find. You can't imagine that we have trillions and trillions of dollars being pumped in by the Federal Reserve, but dollar was very scarce. It is scarce now, and it's very hard to find dollar in the capital markets now. And that's why if you look at the swap market rate, the basis swap has gone up for most currency in Asia. And this is a repeat of what we saw in 2008. Dollar was hard to find. Everybody wanted their hands on dollar. Everybody wanted to get out of their assets into dollars. But there was no dollar to find. There was no market. Now we are in the mode of illiquidity. Suddenly liquidity that was abundant disappeared. They said that liquidity in the global market is like air. When you have plenty of it, you don't notice it. But suddenly when it's gone, you suddenly started to look for it. And then this is what's happening now. And that's why the Federal Reserve is introducing a swap line with other central banks to exchange unlimited amount of dollars to the Bank of England, the Bank of Japan, and the ECB. So we are seeing a repeat of what we saw 12 years ago. This year, most central banks were anticipated to hold their interest rates. Some even were poised to increase their interest rates. But this showed that with the coronavirus outbreak, things have turned suddenly. Now, look at the amount of countries have cut interest rates, and Federal Reserve did a very unusual thing. Federal Reserve interest rate was about 1.5% before this coronavirus, and people expected the Fed to be on hold this year. Just 2 weeks ago, the Fed did an unusual thing. They cut interest rate outside of their regular meeting. They had an emergency cut of 50 basis points, And what's even more unusual, last Sunday, the Fed had a meeting and cut interest rate again by 1 percentage point. So basically, the Fed did cut interest rate 1.5% in a matter of a couple of weeks, and they did it outside of their regular meeting. And you think market would be happy? This completely spooked the market. Market was like, maybe the Fed saw something that we don't know. Why did they have to act on Sunday? So, and I think a lot of rumors are going around that we are facing a widespread bankruptcy in many funds, many hedge funds, many managed funds, many asset managers, because they're leveraging many positions. And now when market moved so suddenly and liquidity dried up, and that is going to cause a widespread shock to many asset managers. And it's going to be like a Lehman moment in 2008. And that's why we saw the Fed had to come in and address market dislocation, the illiquid market in the Treasury bond market. The Treasury bond market is the deepest, largest bond market in the world. And there was no liquidity. The Fed had to come in and pump liquidity in there. And also the Fed just set up commercial paper facility. It's a short-term bond for companies. And it is also a repeat of 2008. And, but I think the stresses are still noticeable in the bond market, the corporate bond markets. The many stocks are illiquid. And this is, I think the central banks have to address that pretty soon. But so far, as you can see, even with the amount of aggressive interest rate cutting by central banks around the world, the Bank of England, the Fed, the ECB, the Bank of Japan, although they have pumped in liquidity, but markets are still very volatile. Because as I said, I think monetary policy have its limits, and this is gonna, be left to what fiscal policy can do. Another thing that is completely wreaking havoc is the policies by several nations around the world. If you read the news, either the COVID-19 is very dangerous, or it's not at all. So now we have in very two extreme. Some of them have complete lockdown of the countries. You can't even leave. Some of them close the border. Some of them said, okay, well, you're advised not to travel. So we get very conflicting advice from government around the world. Especially, I like to highlight the UK in particular. It's the nation that brought you Brexit and stiff upper lip. The response from the Prime Minister was completely in stark contrast to every other country in the world. Boris Johnson told you that nothing to worry about as long as you wash your hands and sing happy birthday twice for 20 seconds and you'll be fine. Okay. But other countries, everyone was wearing masks and they have a complete lockdown. So either we saw the same disease or we don't. Okay. Another advisor I listened to last night, which was completely shocking. I'm not making this up. This is from the chief scientific advisor of the UK government. So now the strategy of the UK is to let everyone get infected so they can build herd immunity. And that's going to take 60% of the population at least. And my friend in England said this is like, Baldric's from Blackadder. This is their cunning plan to let everybody get infected so we build herd immunity. And if you're sick, just stay at home. And if we don't call you, just good luck. But the chief scientific advisor said, they don't want to impose a lockdown now. This is what he said. He said, we don't want to do it now because if we do it now, it might lead to undesirable consequences like loneliness. I'm not making this up. He said people might get lonely if you do it too early. So I think they're going to wait now, and hopefully it get pushed into the summer, and then we'll see what happens. Okay, and this is obviously a huge gamble because Boris Johnson is not. I think he's a gambling man, but he's take a completely different benign approach. Keep calm and carry on, drink your tea. It remains to be seen. I mean, I listened to their scientific advisor and the chief medical officer. It seems to make sense. They said if we do it now, then people rush to the NHS. They don't have the capacity. I think this is sort of similar to what Thailand is doing at the moment. Although I think if our prime minister said, we want to let everyone get infected, I think there'd be riot on the street. But I don't think we can say that in Thailand. So I said the global stock market is, seeing a whipsaw because of these inconsistency in policies around the world. And I think at the end of the day, it will have to come from fiscal policy. This is a real life problem. I remember in 2008, when Lehman Brothers collapsed, I was working at the Bank of Thailand. At the end of that day, I went to a shopping mall around Siam Square. Nobody paid attention to that Lehman Brothers collapse. Everyone was walking about happily. But this time is different. This is a real world problem. At the time, nobody paid attention to what happened to Lehman in Thailand. Everyone was happy going about, their own business. But now it's a completely different story. Now people are completely scared. You have panic buying across the world. I don't know why people kept on buying toilet rolls. I don't know how that's going to save them. But people kept on buying toilet rolls. Toilet rolls are hard to find now. And this is what's happening. And it's a real world problem. The fiscal policy that will have to address the problem of people are unable to leave their house and go to work, people who have shops, who have rent. How are the governments going to address this? This is a key question. You can't just pump in liquidity into the banking system. What happens if you have mortgages? What happens if you have rent, you're a shop owner? What happens if you need income to pay for your credit card, your homes? What are you going to do there? We are in unprecedented times. And I think we see the sort of response that we are probably going to see over the next few months. I think in Italy, they put on hold the mortgage payments, also the utility bills, also in France and mortgage payments. So I think when life comes to a standstill, I think the government has to play its part that, okay, don't worry about your debt payment now, all will be okay, all will be taken care of. I think it will have to come from that way. People will have lost income, people can't work, people have debt to pay. So how are the government going to solve this from being a short, sharp shock and prevent it from turning into widespread bankruptcies? People losing their home, people losing their job, shops are empty, shopping malls going bankrupt, hotels cannot cope, airlines would have to close down. How are the governments going to address this problem? And it's I'm afraid it's a very difficult policy response. Now I think you just have to do a blanket rescue, like what we do in Italy or France. Basically, you save everyone for 3 months. And then, if it gets longer, then, it's going to be problematic on the fiscal debt burden for governments. As you know, that most governments are heavily indebted. How long can they keep on printing money and take on the debt of the whole country? I think this is a big problem that the government has to challenge. The government will be challenged in the next few months. Last night, the UK government, the Chancellor of the Exchequer said, we have prepared a bailout package of about 330 billion pounds, and the market was not happy. The market is still falling. And also in the US, President Trump said that he also preparing a package of $800 billion US, and it looks like the market think it's not enough. So we'll see how the government can fork up all the costs. How can you lift the entire population if you have a lockdown? And that's why I think you have to be careful. That's why I understand the UK government to some extent. If you close down the whole country, if you put the country in lockdown, there will be people who just go bankrupt, basically. And how are you going to make sure you get the money in time for them? And this is a big challenge that we're going to be facing over the next few months. You see volatility spiked, as I said. So we can skip this. My baseline is things should get better. I think Churchill said, there's no point being a pessimist. I think we have to be optimistic. And virus, even though it's a novel coronavirus, it's still a virus. And I think that, as you can see, the countries that have, the most explosive, rise in the number of cases are the countries that have quite low temperature, and they're all situated along the latitude 40. I read somewhere that the optimal temperature for the virus to spread is between 5C to 11C. And that's why you see a huge spread along those countries, China, Iran, Germany, Italy, Spain, Seattle, New York. And it's going to get a lot worse for a few months. And then once the temperature starts to pick up, and I think some say that in Wuhan it starts to get better now because the temperature is rising to 15, 16 degrees, and that's why the virus started to get contained. And also, if you take an example of Korea and China, we think that we can beat this, and I think market are pricing in apocalypse. Like I think they're pricing in like worse than 10 times worse than Spanish flu, and I don't think that will be the case. Look at the case of Thailand. We allowed almost everybody into the country. We're a very friendly nation. So you can see the number of cases in Thailand is only about 200. I think the temperature plays a huge part, and that's why once we get to summer, the containment will be achieved, at least in Europe. And let's hope we can find a vaccine before then, or we can find some sort of a measure to not let it get out of hand again, because winter is coming again at the end of the year. So we have about 6 months to find some sort of solution. But I think my baseline is the world will get better. I think it will be contained within 6 months or so. Do I have time? Yes. Okay. Okay, so now let's talk about Thailand. For Thailand now, I call this it's a 3D economy. It's nothing about dimension. I said Thailand will be characterized by 3D. First is the delay, the budget delay, the disease, and the drought. So these three key things will shape the Thai economy for 2020. Obviously, the first hit comes from the disease. We saw a huge drop in the number of tourist arrivals at our main airports. The number is down by about 3/4. And the latest reported figure by the Tourism Authority of Thailand, I think in February it was down from last year, compared to last year, by about 80%. About 50% if I remember, 40%. But the number of Chinese tourists was down from last year by 85%. And these things don't look like that it's going to improve soon. But I think our baseline is that once we get to spring, we get to summer, it's going to, these measures will be lifted one by one. And I think we're going to see start to return of these global tourists into Thailand. The sentiment obviously plunged with what's happening around Thailand, both business sentiment and consumer confidence. And this is going to bode not so well for the consumption, private consumption in Thailand. Especially you will see that reflected in, we expect car sales to be down by 3-4% this year. And also business sentiment is not going to be bad for private investment, the capex investment in Thailand. I think it's going to be down because of the amount of spare capacity that we have. We are still in the shock. We're still living in the aftershock of the trade war. So I think most factories are still having spare capacity. So there's no need to upgrade their equipment. So that's going to be a drag on private investment for this year. For the policy rate in Thailand, we never thought that we would see this. The Bank of Thailand just last month took the policy rate down from 1.25% to 1%. And it's very likely that they might have to take it down to 50 basis points or 0.5% at the next meeting. Bank of Thailand has not had emergency meeting yet, but I think they have another monetary policy committee meeting next week. And I think I expect them to cut interest rate by about 50 basis points. But I think many on the street may think that they may be on hold. But I think the conditions are ripe for the Bank of Thailand to pull the trigger once again. And I think they have to cut. But we're not going to go to zero like many nations. We're not going to go to negative interest rate like in Europe. I think the effective lower bound that the Bank of Thailand can take the rate down to is 50 basis points. So I think they will take it there next week. And Thai baht. Look at the movement of Thai baht. It's a completely different story. The whole of last year, some may call it Teflon Thailand. I call it Thai baht is a super currency. Nothing can touch Thai baht. It just kept getting stronger and stronger. Last year it was the strongest currency in Asia. I think only second to Russian ruble. But this year at the start of the year, since the virus hit, Thai baht lost about 6%. So I wrote an article in the Bangkok Post. I said coronavirus is the Thai baht's kryptonite, and my teammates who are in their 20s, they said, "What is kryptonite?" Okay, so let's look at the responses by the Thai government. The Thai government, they're doing back and forth. I think a week ago, I think they wanted to do cash handouts, and they got quite heavy criticism from everybody in Thailand. So now they backed away from that. But let me tell you, cash handouts, it's okay. It's not going to cause us to be like Venezuela, or it's not going to lead to hyperinflation. If you do it within reasonable limits, as long as you don't do it like keep on pumping money and throw it from the sky. And this is if you study economics, we call this helicopter money, where the print money and the central banker goes up on a helicopter and then starts throwing money around. This is what's happening now, but I think it's okay as long as it's temporary, and it's not going to be a permanent feature of the economy. And I think you are seeing cash handouts. I think in the US, they said that they're going to hand out about $1,000 per person. It's going to be directly put into the bank accounts. Hong Kong is doing the same thing. Singapore is doing the same thing. So the Thai government is not as crazy as many people have make them out to be. This is a sound economic policy, although we are in unusual time. When I was studying economics 20 years ago, we thought that negative interest rate was a thing that was in fiction, that wasn't possible in the real world. But now we see that negative interest rates are everywhere. We thought QE was going to lead to hyperinflation. QE was impossible. QE was possible now. It's become normal. And now the next thing is going to be cash handout, or we can nickname it helicopter money, or we can a bit more formal name would be universal basic income. You just basically pay everybody every month, and this is what I think what we're likely to see. There's no other way. When people are in lockdown, they need some income. So I think this is the time to sort of pull the trigger on this unorthodox policy. The Bank of Thailand has also come up with a guideline to do debt restructuring. And this is, I think they came up with this policy to help Thai customers, be it retail or corporate customers, SME or large corporates. But then they said commercial banks should help restructure the debt, lower the debt payment, lower the debt burden, restructure the loans for 2 years. But then Bank of Thailand just gave the commercial banks the guideline, said that we help those who are affected. But there's no explicit specification. How do you define people who are affected? I could say I'm affected. You could say you're affected. Everybody could be affected, and if you have to do it one by one, consider the case, go to the board, consider like in a committee. It's not going to be in time. I think the measure that will have to be taken up is going to have to follow along the way of Italy or France, where you just do blanket. Basically, you save everyone now. You can't just be selective now. You just save everyone. It doesn't matter if the guy needs it or not. Just save people first. And I think the Bank of Thailand will have to be a bit more explicit. Because now, if you look at the policies that come out by all the commercial banks, my bank included, you look at all the banks, they say, did they go to the same meeting? They have completely different responses for their customers to be helped out during these difficult times. Anyway, so Songkran will be postponed, as you know it, and I think the bars and schools and activities will be, recreation activities will be shut for 2 weeks. So let's see whether 2 weeks will be enough. Hopefully it will be, but we don't know. But this is obviously going to be a hit to a lot of retail sector in Thailand. So with that, I'd like to end my presentation, and I'm happy to take questions.
Thank Thank you very much, Burin. I think that covered a very wide range of issues, and I know we have quite a few questions that came in, but I'd just like to ask a couple of key things. One was, you mentioned about Boris Johnson's prescription of telling everyone to sing happy birthday twice and be happy and calm, and this extraordinary attitude on the part of some advisors in the UK of perhaps being quite relaxed about how much the virus would spread in the UK. However, at the same time, we saw an extraordinary stimulus package announced last night by Boris Johnson of $400 billion, which is probably one of the biggest and most substantive moves taken by any government around the world. That would indicate to me a fair bit of panic. And you've just said about helicopter money that maybe that's the only way. Thailand has not done it, some countries have, and the UK is going huge into all this. They're giving £25,000 loans to anybody who has a small business, whether they're registered or not. There's heaps of big money coming the way of people, so they're obviously worried. Are you saying that Thailand should do this, and also whether it would help?
I think it will help, but I think Thailand would have to come in some sort of package to help people who are affected. But as I said, it's very difficult to tell who's affected and who's not. And if you're going to be, take your time to say, okay, you're eligible for our, rescue package, and you're not, it's going to take time, and some people will go bust in the meantime. It's not going to be enough. Now we are in an emergency situation, and I think this extraordinary measure would have to be in place. So, but I think my fear is that once let's say you start this policy, and it's going to be very hard to get it back. Once the genie is out the bottle, now people say, why can't you do it a bit more? Why can't you be so heartless? Why do you get us free money for a few months and then you take it back? How do we survive? Getting it out is very easy. Getting it back into the bottle, the vase, is going to be problematic. People could very well get addicted to the government help.
Right. And
we just run into more and more fiscal debt, and that's gonna be a threat to financial stability of many, many countries.
Sure, because I think the other bottom line is that with these massive spending announced by the UK, US, Australia, others, I mean, it's all drawing on public funds. Public funds come from taxes.
Yes.
Taxes are paid by people who have money to pay tax. It's obviously a vicious cycle. So if you're talking about the kind of gloom and doom you're talking about with businesses not making money, how long can those handouts last? And with interest rates, if they're cut to zero or negative, as you say, I mean, what comes after that? There's no ammunition left amongst central banks. Where do governments get money from?
Well, I think lucky for in the case of Thailand, I think our public debt to GDP is only about 40%, 41, 42%. So we still have fiscal room to expand our debt. So we are lucky in that sense that we have not been too crazy about spending money. So I think we have some room to do some rescue package for the country. But I think for other countries like, I don't know, Japan with over 200% of debt in GDP, even the UK, Germany, so they're all quite heavily indebted, and that is going to be problematic for many countries who don't have this fiscal capability of borrowing more.
So you're saying Thailand should perhaps dispense some helicopter money and subsidies?
Well, I mean,
and massive
as an economist, I think it's going to be helpful, but with the politics of getting it back is, I don't know, I don't want to comment. It's very difficult to, how do you get it back afterwards, like I said, especially in the times of, the politics in Thailand now is very fragile, and, people complain about everything, but I'm sure that's the same everywhere. People like to complain about their governments, and Thailand is no exception. And,
Okay. We've got various questions. I think my colleague Jonathan Head is going to read some out. I've got one here that was emailed in by Peter Tasker from Japan. He asks, is there any risk that bankruptcies in the tourist industry could spill over into the banking sector? And how much will Thailand, for example, benefit? Oh, this is a separate question. So one is there a risk that bankruptcies in tourism, which I think we're going to see a lot of in Thailand, but also right through Asia probably, could really hit the banking sector? The second question is, how much will Thailand benefit from the lower oil price? Perhaps you could also apply that to the region. So.
Right. So the first question, of course, there's a very real possibility that the bankruptcies in the real sector is going to lead to financial crisis. This is a completely opposite from what we saw in 2008, where the problem started from the banking sector and it started to spread out to other real sectors. But now we are seeing a complete removal of economic activity on sectors like tourism, hospitality, travel, and this is obviously going to hit the financial sector, the banking system, and that's why I think the government have to come up with some rescue package, not to let them go bankrupt, these people who are heavily affected, because otherwise from a real sector crisis it's going to turn into a banking crisis, and then the government will have to bail out the banks, and it's just going to be a mess. Right. So I think the government has to put out the fire that they see now, and they have to be fast, they have to be decisive. But I think most government are like, because this is unprecedented.
Rescue failing companies?
Yes. Yeah, I mean, you should not rescue insolvent companies, but you should rescue, I think the same thing go with like Bashihot policy, like when you save banks who are having a liquidity problem, not a solvency problem. Also the same thing should apply. You should help companies that are facing illiquidity problem, not solvency problem. But it could very well turn into from liquidity problem insolvency problem very soon if things don't turn around. If there's no business, obviously they're going to go bankrupt at some point.
Right. And the other
lower
question
oil price
was about
lower price will help, and that's why we estimate that our current account this year will be about 19 billion. Even though despite a huge drop in tourism, we still expect Thailand to accumulate current account surplus by about 18-19 billion because of lower oil price, a much lower oil price.
Right. And the other parts of Asia, you think there will be an overall net sort of benefit from the crashing oil price?
In normal times, yes, it's a boon to the economy to have lower oil price, but probably not this time, because I think with a sharp movement of oil price like this, many companies might go bust, especially companies that have their product linked to oil, oil, like chemicals and plastics, and their cost might be at some level, and now with the lower oil price, they might incur some accounting losses. So I think we like lower oil price, but it's not like a huge drop like this. It's going to cause some business problem for some companies.
Oh, thank you. And I think my colleague, and also we will take questions from the audience if you'd like to ask a question. I think, Jonathan, you have a few from Facebook or YouTube.
I do, yes. Elaine Kurtenbach, who can't be here tonight, but she's asked two questions. I think they're quite interesting. The first thing she's asked, Kumbura, and I think you may be able to answer this, is where has all the money that has been sucked out of the stock market gone? Her second question is, how much of a challenge is this shock going to be as a political problem? Do you think it's going to be, when you have such a shock to the economy, I suppose the question there is there something that is within the remit of normal government actions to be able to address, or simply way beyond what they can do? But it's certainly answers to either of those questions, please.
Okay, the first part, where has all the money gone? is within the capital markets. When you read the news, like they like to put the headline, like the valuation has disappeared by $4 trillion over the stock market. The money hasn't gone anywhere. It's just the valuation. If you have let's say you have a car, a classic car, it used to be valued at $1 million, and suddenly people don't like this car anymore. People prefer electric cars. suddenly the price might go from 1 million to 0. The money hasn't gone anywhere. There's no transaction, but it's because there's no demand for it. And this is what exactly what's happening to the stock market. So I think at extraordinary times like this, we have to keep a cool head. Things can't be, the expectation of the stock market is like, we are never going to get out of this. So I think that's my answer. It's just that the valuation perception change, but there's no money it's not a zero-sum game. It's not like,
Are a lot of funds, though, parking money in cash rather than keeping it? I mean, obviously people are selling equities, so there is selling that's going on, isn't there?
Yeah, that's true, but it's also because of, I think the funds are, with their position of, in stock market, with a huge drop like this, they can't sell it in time. So they get stuck. Obviously, so valuation drop. But I don't think it's not like you sell stocks and put it in bond or sell stock and put it in cash. It's not as simple as that. It's mainly valuation issue. So that's what you see there. I'm sorry. The second question about the government. Yeah, I think the government has to do something unorthodox here, because we never faced anything like this before. In the old days, I think if we face something like this, the government said, well, we are, laissez-faire, we'll let you go bust. But I think the experience of the Great Depression and the experience of the 2008 crisis is the government should take an active role in preventing a calamity in the economy. I think there are some roles that they can do, by fiscal policy, but also I think they also need help from, let's say, central banks. I think central banks is also have to, let's say, help prop up the commercial banks. It's going to be something we've never seen before, I'm sure. The responses from everywhere rather, but it's a political risk.
Are there precedents that we should look to? Because I remember in 2008, people said we've never seen anything like this before either. But certainly in the Obama administration with Ben Bernanke as well, they were looking very much back at the 1930s. And then, of course, 1997 in Thailand, you had that crash, which was a sort of partly a property boom, sort of banking over exposure. I mean, are those experiences that government should be looking at now, or is what we're going through now so extraordinary, so widespread across the globe that whatever we learned from those crises will not be applicable?
No, I think lessons could be learned from what happened in 2008-9, but it's on a different scale here. In 2008, Ben Bernanke did many extraordinary things, like saving investment banks, which wasn't really under his mandate, but he said he had to save insurance, he had to save investment bank. In the UK government had to save many car companies, like Jaguar, Land Rover, bailout. There are many bailouts that the UK government had to do. So I think some of the measures could be, some of the examples could be learned from what happened before. But I think it's going to be on a wider scale, because now, how do you bail out a normal person, a retail person like us? Let's say we're in dire strait. How can you get cash handout? How do you formulate the right amount for a person? It's very difficult. Like with companies like in 2008, you can say, okay, we're doing this because we're saving jobs, we're saving the economy. But how can you say that I'm going to bail out Mr. Smith because he's a nice chap? And it's very difficult, and it's very hard to get it back. Like I said, once genie out of the bottle, then it's going to be problematic.
There was another question from Pan Siripak, who can't be here either. He's in Samui helping his mum run her hotel. But the question he asked is, we're looking at some of the governments around the world now coming up with the simple idea of cash handouts to help people try and get through. I mean, because so many people are going to lose their jobs. Is that an appropriate and viable approach for the Thai government to take?
Yeah, I did answer that question. Yeah, I think cash handouts are appropriate at this moment, but it has to be, it can't be a permanent fixture. It has to be right amount, for a limited period of time. And once we get through this coronavirus outbreak, and then we should get back to normal. But politically, I know it's very difficult to get through. But even though I'm a taxpayer, I think the idea is sound, and I don't mind helping out my fellow citizens in these difficult times. But some people are just complaining about my tax money. The government is stupid, paying everybody left, right, and center. But I think in this time everybody is doing it. So it's not like the Thai government is they're not doing something so extraordinary that other European countries are not doing.
There was one other question from Dave Kendall. He's asking, I guess this is quite a hard one to answer. He's asked, what if the virus becomes endemic and we see it coming back year after year? How will the Thai economy need to be restructured, particularly with its dependence, which has, of course, grown in recent years on tourism? Tourism now looks very vulnerable. I mean, if you were advising the Thai government now with a view to the fact that we know there'll be long-term effects, what would you be suggesting they look at?
I said, please help put money in research and develop a vaccine. And I think the vaccine will be developed soon. I think, with all the brains around the world are working on it, I think sooner or later we will get one. I think the news is one woman in Seattle just get tested on an unproved vaccine. I think soon we will get one. So I think I'd rather be an optimist than a pessimist. If you think, if you look at Spanish flu, it gets better. All these bubonic plague or everything, the world will adapt. Human will adapt, virus will adapt. One thing I learned is that virus does not want to kill the host. Because if it kills us, it's going to die as well. So it's going to adapt to be less powerful version of itself so that it can sort of cohabitate with us. It might be with us for the long, the next 50 years, but we learn to adapt with them. We learn to live together. That's what I think.
Just one from me, which is, you talked about people asking you about the right time to get back in the stock market. And of course, at the moment, you're saying, well, nobody has any idea. But how will you know, as a banker and as an investor, when the right moment is to get back into the stock market?
Well, I give you an old saying. I said, nobody rings the bell when it's at the bottom. So that's an old saying. But I think if you were to look at the example of 2008, 2009, when the valuation is at an extreme, or when the volatility is priced in like what we saw last week, when the VIX index is at 85, 95%, it means like the amount of pessimism was really up there. Then, it might be time to consider, going in a bit, but, nobody knows. It could last, because now it's unprecedented, but I believe that we're going to get better in a few months. So if you're an investor, a long-term investor, you're not leveraged, you're going to just start buying some good quality stocks. Perhaps not airlines at the moment, but
and many people saw the stock market as potentially overvalued, and something was going to come along to deflate it. I mean, the level of correction we've seen now, do you think that is what you should have expected from a correction, or is this much, much bigger than we would have expected?
Well, I think because for the past 10 years, everybody invested in stock market. The return was extraordinary. For the S&P 500, it's on average it should earn you 7% a year, but for the past 12 years or so, it's earning 10 to 11% a year. So and then it's sort of unbroken record for 10 to 12 years, and something has got to give. And I think valuation has come down, but I think some stocks are overvalued. But you look at Thai stocks, some of them are really cheap. Like you look at bank stocks now, they're pricing in like the whole country will go bust. And is that realistic? I don't think it is realistic to me. So I'm not advising buying bank stocks, but I think some are relatively cheap and paying good dividends. I will not name, but
we have had just one more question. I
course.
suppose it's an obvious one you might have got from anybody on the floor. Advice for investors. This question particularly refers to the crash in the bond market, so I assume she is perhaps exposed to them. But if when panicky investors come to you now and seeing their portfolios going through the floor, particularly if they're getting close to retirement where they might need to cash in on those, what generally do you say to them? I mean, because this is unprecedented, you can't tell them what you might have told them during a small market correction a couple of years ago.
Well, I would tell them to just keep calm and leave your portfolio for your grandchildren. It's going to come back in 10 years.
That's not much reassurance for
retired 80 years old.
A retired 70-year-old who's worried about their savings.
No, but I think this is going to be. It's not a problem that's going to be with us for the next 50 years. This coronavirus problem is going to be with us for 3 to 6 months, and things will get back to normal. So keep a cool head and look for opportunity to get in. But don't over leverage yourself. I mean, buy when there's blood on the street, that sort of thing. Well, not a virus on the street, to speak.
Can I ask my own, which is, today I published an article which actually may be a bit controversial, looking at some of the unexpected upsides of, or less negative or even positive outcomes of the coronavirus so far. I mean, one of those includes this massive urgent push into online education. So despite rhetoric about the digital era, we've seen extraordinary things happen in the last month where teachers overnight have had to put their whole curricula online and use video applications, conferencing to start teaching online. This ultimately will benefit children in poor and remote areas around the world who can, all you need is internet access. Even on the phone you might be able to tune into a class, which actually ultimately may be a good thing and has only been caused by this urgency of school closures and university closures. But another aspect I looked at was that for every big loser on the stock market, so we've seen the slide of big oil, big tech, other things, there are these improbable winners, like whoever would have thought makers of toilet paper, face masks, rubber gloves, and also everyone's talking about the extraordinary rise of Zoom conferencing application, which was the best performing stock on the NASDAQ in January, continues to do well. Every stock related to home entertainment. Amazon has, by the way, said it will hire 3,500 new people because it's like deluged with demand. So also online anything, online shopping, anything that is facilitating people staying at home, self-isolation, whatever, is doing well. So I think this overall view that like anything to do with the stock market is like toxic and we're all losing is a little bit misleading, and it does create a self-enforcing sort of sense of panic.
Sure.
What's your view on that?
Well, I think, like I said, I agree with you that online education will be a good thing. I read somewhere that people used to believe that you should have a smaller classroom. So you produce many teachers, and so that you can have a student ratio to be student-teacher ratio to be as small as possible, and that would be good for the children. But I think I've seen somewhere that no, it's better to have one great teacher, and then you can have 1,000 students, like in lecture halls.
Online, you could have a million students.
And now you can have great teacher, and then ask him to come in once a week, and then it can be beneficial to a lot of students in poorer area who have, not great education, not great access to education as in Bangkok or in other places. So I think it will be a good thing, and this will change the way we live. I'm sure. The other day I saw it. A couple of weeks ago, I saw that in England, school children were taught to do a Y instead of shaking hands. And then a week later, I saw Prince Charles did a Y to everybody. And now people stop shaking hands.
Can you demonstrate a Y?
A Y, yeah, it's a Y. So, and I think now it's going to be, we have to think twice before we shake hands with anyone.
Right.
I think this is going to last a permanent scar on us. And, would we go on a cruise again? Not sure. Would we eat a buffet?
But getting back to stocks, this issue of the fact that it's not all like doom and gloom. I mean, there are
winners.
But are you saying, do you think that actually people should just get out and go for gold if they want to park their money? Should they be going back into like your basic bank account at 0% interest? I mean, what should people do with their money?
Well, I think for now, cash is probably king, and then look for good opportunity to get in. I don't expect the world will be like this forever. People will get back to normal. People will come out and eat. People will come out to party. People will get on aeroplanes again. It's unthinkable that we would be so scared to get on aeroplanes again. That's not possible.
Well, but are these airlines going to exist? Everyone's saying that airlines are going to collapse.
But the technology is there. Airlines might collapse, but airplanes, the technology will be there. The new ones, we might go even electric aeroplanes, who knows. But we will get on planes again. We will go to hotels again. We will go to exotic holidays. Or you guys will come to Thailand again, so.
Right.
Yeah,
well,
I think this is just, we are pricing in too much doom and gloom. I think we have, we have 2 world wars, we have so many disasters. This is nothing,
Right.
right?
Oh, I hope you're right. Does anyone have any questions from the floor? Would anyone here? Yes, please identify yourself, and we'd love to hear what you would like to ask.
Hi, my name is.
Can you
Zaghi.
just bring the microphone towards you a bit more? Like, yeah, great.
Hi, perfect, there we go. Okay, so my name is André van Straten. I'm an international relations student at Webs University over here. And my main question is, how do you think the coronavirus is going to impact ASEAN's Regional Comprehensive Economic Partnership, or RCEP?
I don't think it's going to affect it at all. It might delay the meetings, it might, but it's going to be there. People, with the experience of the U.S.-China trade war, I think people like to realize that they should exist as a group, to be strong. And so I think there's a tendency for countries to get together and do a trade bloc. So I think it's going to be delayed but not derailed. That would be my answer.
Thanks.
Yes, Robin, please identify yourself.
Yeah, Robin Shell, member of the club. What about national debt? All this money that governments are giving away, will countries collapse because of national debt? Is the dollar safe, or will in the end the American economy, because the national debt's so high, will it collapse?
Are you talking about the Americans or any countries?
Actually, any country, but particularly the Americans.
Okay. I think the U.S. is in a unique position where it's got the dollar, and this is the world's reserve currency. So it's got this extraordinary privilege of printing dollars, and people like to have dollars. So I think they can go on being indebted for a long time. So the U.S. government is in an entirely unique position. But other countries, there will be a time and limit where you cannot just keep on borrowing forever. So that's why countries, you look at the fundamentals, like the case of Thailand, we only have 42% of GDP in public debt. So we can run it up to 80 or 90. But compare that to European countries where they have over 100% of GDP. Those will be in a more precarious positions. But of course, it depends on where your starting point. And like I said, I think these policies should be implemented for a limited period of time. It should not last forever.
Thank you. I think we have one more question from YouTube or Facebook. And Jonathan, I think you've got it there, have you? About the Thai baht.
Yeah, it's a question from Jirapon Chayasan, who's sent a question and asking about the value of the Thai baht, how much that's going to be affected. She's wondering whether we're going to see it slide to maybe 35 or 36, which of course many people remember it has been in not such distant memory.
Well, I think it's going to get weaker. Our forecast is, by the end of the year, we should see something like 33 baht to the dollar. We're not. I don't think the dollar will strengthen another, 10-20% from here. But I think we can certainly see 32.5 to 33, which was our original forecast at the end of the year anyway. And now it just come to pass so quickly.
Is that a weakening of the Thai baht?
The weakening of the Thai
dollar?
The weakening of the Thai baht, yeah.
But
the dollar will get strong because this year the dollar will be a safe haven asset. People would like to get their hands on dollars. There's not enough dollars in the world. Like emerging countries will be facing problems. They would like to get their hands on dollars. Many countries who borrow a lot in dollars we need to find dollars to refinance or roll over the debt. So the dollar will be in high demand this year. So I expect the dollar to be strong for the rest of the year.
It'll give Donald Trump something to cheer about his election campaign.
Oh, he doesn't like strong dollars.
True.
Yeah, he likes low interest rate, good stock market, weak dollars.
But with the tanking stock market, the dollar value might be the only thing he can refer back to. It's going up.
Yeah, but now his stock market is collapsing. Now he has to find a reason for his campaign. So we'll see what he comes up with.
On the Thai baht prediction, I do note though that you are predicting, it seems your worst case scenario is 1.5% growth for Thailand this year.
No, that's
But
our best
actually-
case scenario.
Okay, but I've seen some economists estimating that it could absolutely crash nearly to the floor. So we're talking about 0.5%.
You
growth.
mean interest rate or economic growth?
No, economic growth. And if that's the case, and if it really, you know, you've seen the worst case scenarios, which is everything crashes in Thailand because of that confluence of factors you mentioned, drought, collapse of tourism industry, wholesale job losses. I mean, there is that apocalyptic scenario, which is not out of the question. If that happens, I mean, can you see the Thai baht like sort of like going
Well, I mean,
far
if we
worse
go
than-
into apocalypse, then you could see Thai baht just, spiraling, like in 1997, let me
Right.
remind you, we went down like
What did it go to in 97?
I think
Remind us.
25 baht to the dollar, went to the peak at 56 and then started to stabilize around 50, 48 or something, yeah.
Right.
But we're not in the same regime as we were in 1997. We are on a flexible currency regime, so we're not going to have like a sudden shock like this where the baht just suddenly lost half its value. We're not going to see that. But we might see a continued decline,
Right.
continuous decline.
Well, I
over
must say,
time.
given the fear and panic now, and there isn't that much panic in Thailand, but there's a lot of fear. I think people are quite braced for worst case scenarios, actually. So it's not like it's a sudden shock. It's been happening incrementally.
We have another
Jonathan.
question, actually. This is a question from Michelle Clark, who's been watching from the States, and she was asking whether this crisis is perhaps an opportunity for a country like Thailand to reduce its dependence on the traditional arms of the economy, particularly its dependence on manufacturing exports. Of course, we know it's been highly dependent on tourism, and that's grown as well. And I suppose you could argue the third leg is agricultural commodities, which also don't look too good right now. I mean, is this an opportunity, do you think?
Well, I think, as a rule, a country should not be too dependent on any particular sector, because once that sector is gone, then you just completely find yourself. It's like what they call a Dutch disease, where you suddenly depend on one particular commodity, and when that commodity is gone, then you find yourself having nothing to support your economy. Obviously, we do not want to rely on that, but I think this tourism have much more room to grow. But of course, we like manufacturing. Maybe what we can do is be a bit less dependent on agriculture. I think the problem is we have about 30% of our workforce are in agriculture, and they only contributed to about 8% of GDP. So 30% of the people only produce 8% of GDP, and that's why we have this persistent wealth inequality in Thailand. So I think maybe not less manufacturing, maybe less agriculture, or maybe move into smart agriculture. I think this is the policy of the government is trying to, bring in new clusters of the 10 industries, smart agriculture, smart farmer. I think those, we have to go there. But, I don't want to use a crisis as an opportunity to change, but I think we should do it a long time. We should have done it a long time ago, or we should continue to do it. We should not be forced into a corner and do something which is vital to our long-term health of the economy.
Is it fair to say that Thailand has become over-dependent on these three legs? Because if you think about all three of them are weak. We know manufacturing, Thailand has been losing its competitive edge for years now. Commodities prices have been depressed for years now. And tourism, ultimately, it's grown so fast. Many people question its sustainability. And those really are the three legs. So, the questions were already there. The question is whether this now accelerates government thinking, that a government that was tinkering, but perhaps not really urgently addressing them, now may now feel we have to do something because we are in an unprecedented crisis.
Yeah, I think the government has too much on their hand at the moment. I don't think they're thinking about long-term reform. When the house is on fire, you're not going to start thinking about decorating it, right? So I think now you have to put out the fire first, and then start thinking about the long term, right?
Thanks. I also like your imagery about people running in to have 4 haircuts at once because they haven't been able to have one for 3 months. Anyway, on that note, unless anyone has any other questions, I'd like to... Oh, one more. Okay, one more. One last question.
He's a friend of mine. He's gonna get me
Well, you're
a
allowed.
really difficult question.
I doubt it, but anyway, let's see. Please identify yourself.
This one is completely ad hoc, not
Yep. And your name, sir?
prepared. In comparison to
Oh,
the hamburger crisis.
Your name?
can you just introduce yourself?
Oh yeah, sorry, I'm Akrapo. I'm his friend. Obviously. It's not something we prepare for. Like last night but in comparison to a hamburger crisis or Tom Yum Goong crisis, this one is created by nature.
Created
Right.
by
Nature.
nature, yeah. Okay.
So what do you think is a different outcome going to be from comparison to hamburger crisis or the Tom Yum Goong 97?
So you're
Yes.
referring to the Tom Yum Goong crisis being 1997,
the Asian
collapse of
financial
the Thai
crisis,
baht. Yeah, the Asian financial
It's
crisis.
a completely different crisis. Let's say, anyway, I was going to quote Anna Katerina, but anyway, I won't quote it. But anyway, all crises, you have to start from somewhere. But in 1997, it was a different crisis because I think we had a currency crisis and banking crisis because we had a fixed exchange rate. And we borrowed heavily from the US, the foreign capital market. And we borrowed from abroad, and then we lent it out in Thailand, in the hope that the exchange rate would not change. But of course, that turned out not to be true. And many companies went bust. Many banks, many finance companies went bust. So we are completely in a different. We're completely in a different. It's a different animal. Let's say now we don't have a banking crisis. We don't have a widespread bankruptcy just yet. But if the government doesn't do something radical or extraordinary to save a number of companies, like I mentioned, then it's going to turn from a small sharp shock into a permanent loss of output, and then it's going to leave a permanent scar in the shape or face of the Thai economy for years to come. So I think the government has to act fast. But it's a different crisis. It's not a banking crisis. It's a real crisis. But we think it's going to be short and temporary. Yeah.
Well,
Actually,
short
that
being
leads
what?
to
There's
my-
many definitions of short.
Yeah. Like I'm an economist. In the long run, we all dead. Well, I hope this gets resolved before we are dead. Yeah.
But you're saying by the end of the year or by the next month or two?
Now, I think the coronavirus problem will get resolved by. Hopefully, it will be contained by July. Like I said, I think the weather
July.
will help.
Well, I hope you're
Actually,
right.
that leads to my last small questions. If you were chief economist of this government, what is the next thing you would do right now?
You put me on a very difficult spot. I think you have to, like I said, you have to think of a policy similar to what the West is doing now. Offer a blanket rescue to everybody. You can't be nitpicking. I'm going to save this. I'm going to save that person because he's working for airline. I'm going to save him because he's working for a retail industry. Now you have to save everyone, and then make sure people don't become unemployed, don't get even more indebted. People don't get desperate, and then they go for loan sharks. You don't want to put people in those desperate situations. So, like I said, helicopter money might sound like a crazy idea, but it might be applicable at this particular moment.
Sounds to me that you're like combining both Trump and Boris Johnson attitudes or approaches to.
Yeah, I mean,
Yes.
you have to save people now, otherwise it's gonna lead into a vicious cycle.
Right.
If you don't do it now, you do it 6 months later. There's no point now. People become unemployed, and some estimate from the UK government said if we don't do it now, we might have a unemployment of 20%, and you're gonna go back into the Great Depression period, and that's not very nice, is it?
Right.
Yep.
Okay. Thank you very much. And on that, I would just like to thank everybody and also people watching on YouTube or Facebook. I'm sorry we had some problems with the sound on YouTube at the beginning. I think it was fixed fairly quickly. And I'd also like to thank Julian Haddon, who was our person trying to cope with double streaming on Facebook and YouTube and the cameras tonight. And of course, Kun Burin for giving your time and all of you for turning up. Just to remind, we will try and continue limited programming from now, and would really appreciate your support. And hopefully we'll do something else next week on the future of Thai tourism. Again, maybe like this, live streaming. And we'd welcome any feedback you've got. You've got our Facebook and YouTube and emails. So thank you very much, and we'll see you again, I hope.
Thank you very much.